Okay, hello everyone. Thank you for joining us. I'd like to welcome you to our discussion panel about financial stress testing and managing cash flows during a crisis. I'd like to start off by introducing myself. My name is Mohammed Ismail. I work at D3 as a financial strategy associate. We've had the pleasure of working with a portfolio of companies on different aspects, mainly focusing on financial strategy, capital structuring, valuation, and operations. Previous experience includes consulting at SS&C Technologies, a Fortune's top 10 fastest growing company, as well as stints in M&A, private equity, and engineering. A quick introduction about District 3. Based out of Concordia University, District 3 is a leading innovation hub in Montreal, open to all. We nurture and develop multidisciplinary teams and scientific entrepreneurs that harness emerging technologies to create businesses with a global impact. Since our founding, District 3 has supported over 530 high-tech startups from all sectors and built a community of over 10,000 people. In 2019, District 3 startups have raised more than 18 million in financing and generated over 4.8 million in sales. Now, we know that these are tough times. Heck, I've been stuck at home for the past 3 weeks now, and we wanted to let you know that we really feel the pain and we're here to help and support you. In fact, we have brought in a panel of experts who have seen it all, and they are here to share their thoughts on how we can weather the storm together. However, before we start the discussion, there are a couple of points I'd like to address. First of all, please feel free to ask your questions in the chat so we can have a healthy discussion. Second, a reminder to all D3 companies participating in today's call that we are having a technical cash flow modeling session after this event. You will be added automatically to another room so you don't have to worry about anything. And third, finally, please turn on speaker mode in Zoom for a more immersive experience during the panelist discussion. So I'd like to welcome our panelists, Xavier Hervé, Jean-David Béjean, and Alex Sigal. Xavier, I'm going to do a quick introduction on each person. Xavier he's our executive director and founder at District 3 Innovation Center. He has a 25-year track record of transforming strategic plans for innovations into businesses on an international scale. His dedication to helping young minds and passion for innovation led him to launch Concordia University's District 3 Innovation Center. An engineer and entrepreneur at heart, Xavier leverages 20 years of experience in several technologies and engineering-intensive domains such as aviation, information systems, simulation, and green tech, working at corporations such as Mechatronics, Oracle, CAE Electronics, and Bombardier. Our second panelist for our event is Jean-David Béjean. JD is a venture capitalist turned entrepreneur and angel investor. As head coach at District 3, JD helps founders find product market fit, grow their key metrics, and secure financing. Having previously worked as a growth advisor and mentored at firms such as VM6 Software, Techstars, and Traction Ventures, JD leverages more than 15 years of experience to uniquely equip startups with the tools they need to grow into successful enterprises. And our final panelist is Alex Sigal, CFO of Premier Executive Suites. Alex is an entrepreneurial executive with an extensive business background in a variety of industries. As CFO at Premier Executive Suites, Alex possesses a broad base of functional experience in operations, general administration, finance, project management, and contract negotiations. Leveraging more than 30 years of experience working for organizations such as iClassified and Stellate, Alex has developed a strong focus on details, value creation, and business growth and financial management. Thank you for being here. So I'm going to start off the initial discussion by I'm going to ask Xavier our first question. So Xavier, there was a recent survey conducted by Lamaine which showed that 60% of the startups in the ecosystem have around 3 months of runway. You've been talking to a lot of folks in the ecosystem. Can you tell us, what are you hearing? How is the ecosystem responding to the current situation?
Hello, everyone. Thank you for being with us. I think the whole ecosystem is reactive and very resilient. I think there's a lot of people doing a lot of good stuff to help everyone. I'd almost say there's too much help in certain cases, and so I think our co-founders are definitely assaulted with much good intent, but still assaulted. More long term, having lived crises like this one, and crises like this one, I should say in all humility, of less amplitude than this one, I think that the cash flow constraints are going to last more than 3 months. So when I hear from statistics that our startups have a runway of 3 months, I'm saying that's a big challenge, because the runways ideally should be extended to 18 months. And I'm not the only one saying that. There is many renowned experts in the startup ecosystem. Steve Blank, for example, has exactly the same numbers. So that it's going to be a very challenging time to manage cash flow and being creative about it for everyone in society in general, but I think for startups even more so.
Okay, very interesting. Thank you, Xavier. I'm gonna jump to Alex for my second question. Alex, having navigated the dot-com bubble, September 11, 2008 financial crisis, what would be your key takeaways for an entrepreneur to manage his/her company during a crisis?
Well, I think Xavier touched on it. Right now, cash is king, right? And having as much runway as possible to ensure your survival is going to be paramount. So let me just maybe take a step back to kind of explain the context in which I'm saying that. So as you probably all know, the stock markets are roiling. And so, at the end of the day, the stock market dictates the valuation for a business. So if you're in a particular space, you could look at a public company, and that company trades at a multiple of revenue or a multiple of earnings, depending on their situation. And if that company's stock is compressed by 30%, that kind of 30% moves all the way down the food chain in terms of the valuation process. So if you invest money in a public company, as you know, you could put your money in today, take it out tomorrow, it's liquid. Anybody who puts money into a startup at this point is putting it into an illiquid, high risk venture. So if the public company has had a 30% compression in their value, that could manifest itself at a multiple down to the private valuation. So you don't want to be going to the financial markets to raise capital now, because you're going to pay a dear price for that capital, either by way of dilution or whatever other rights that an investor would be able to exact from you. So, this notion of keeping your powder dry, sitting on your cash, extending your runway as long as possible is really paramount. So I think you all have to look at that, and 3 months is nice, but 3 months comes and goes very quickly. So extend that runway as long as you can.
Absolutely. So you're really recommending for people not to really cut down their costs as much as possible and just like maintain as much cash as possible in their banks, because this is going to be, we're in it for the long run. Is this what you're doing?
Well, it's twofold. I don't say necessarily cut your expenditures. Anything that supports sales is something you need to pursue. So if you're looking at an activity that's going to give you a return in terms of cash flow, absolutely you should be pursuing that. In the current context, there's only a handful of businesses that are open today. So it's very difficult to suggest that you should be spending any money in the current context until we have some visibility the economy is going to start to open. I think what you need to do is to preserve your cash. That to me is absolutely paramount at this point. So
for sure. Even like just to add that, to all of our listeners right here, is that I'm pretty sure that everyone's up to date with what the government is doing, and they're really trying to put in stimulus and liquidity to all of the companies or the SMBs in Canada. So Alex, I do agree with you. Cash is king. It's all about really having extending runway and trying to generate positive cash flows in the wherever you can, given the current situation.
Right. I would add, this will pass. I know it seems very gloomy, but I could tell you, after 9/11, people thought they'd never get back on a plane, and that industry recovered. There was a financial crisis in 2008 where the financial markets had basically collapsed, and you didn't think you would recover from that. you know, the dot-com bubble bursting and then, you know, the internet reconstituting itself. This will pass. The question is, how long is it going to take, right? That's what we
Absolutely.
really don't know now. Is it going to be, you know, a quick inflection? You know, they found a cure and then, you know, life goes on. So it could be quick, it could be protracted, depending on how things go, but it will come back. The markets will come back. So there is, you know, don't lose faith is really what I'm trying to say. It's a rough patch, and this is unprecedented, obviously, when global economies basically come to a stop. But we will get through this.
Absolutely, absolutely. It's also really about maintaining like a positive state of mind and really just like being able to kind of focus on the long run and just like feeling that, okay, we're gonna get through this. Keep pushing at it. We're all in it together. Literally, the whole world is in it together. So we got this. Perfect, Alex. So Judy, we have a question for you. How do you view a startup? What are your thoughts on a startup adjusting its cash burn rate under different scenarios? So let's say that COVID-19 lasts for the next 3, 6, or God even knows, like 12 months. How do you think a startup should be adjusting its cash burn rate based on that? Different scenarios that are happening.
Well, I mean, just taking a step back, you know, to me, the first thing before figuring out how long it's going to last, nobody knows how long it's going to last. So I was with a group of 10 entrepreneurs this morning, and I ran a survey and basically asked all of them, and you know, there was really absolutely no consensus with respect to how long this is going to last. So I think, you know, you should brace for the long haul. But, you know, to me, just to add to what was said before by Xavier and Alex, you know, one of the places I would start is basically look at revenues. Mm-hmm. And revenues twofold. One, what portion of my revenues may be at risk? And second, there are actually a few companies that have sales opportunities in this environment. So I'm working with a company that does infrastructure for local delivery, mm-hmm. and their demand has surged fourfold. I mean, obviously, if you sell surgical masks today, you know, you're in for a bonanza. But absolutely. You know, everybody's about, you know, cutting expenses, and so I think it's important to think about this in a two-step process. Mm-hmm. I mean, so first, stabilize the ship. Make sure you're good to go for the long haul. And, you know, second, you know, be compassionate, and, you know, be compassionate with the employees that you're going to have to let go. Yeah. And also be compassionate with your customers. I mean, the reason people are in business is to actually sell product to customers. And I think these types of environment are actually extremely good to establish better bonds with your customers. Mm-hmm. So if you treat them well in this type of environment, they'll remember you afterwards. So then, you know, how long it's going to last? You know, I think you should have, you know, it's anywhere from 18, if you could lengthen it to 18 months. I think it really depends. Most of the companies we tend to deal with are not yet profitable and are pretty far from being profitable. So it's basically bracing yourself to be able to wait till the capital markets are a bit more receptive. And, you know, just bouncing on a point from Alex earlier, speaking about the capital markets. I mean, one of the things that entrepreneurs need to realize is that, you know, most capital, or especially angel investors, are extremely sensitive to variations in the stock market. And I don't know how many entrepreneurs I've spoken with who had term sheets on the table. And the one I was speaking with actually this morning had his term sheet pulled from him. The deal basically fell through because two of his angel investors actually literally ran out of money. So, you know, those were guys who had invested in, you know, in pot stocks and, you know, tech companies, and, you know, the stocks have been obliterated. Absolutely. So it may take a long time before capital markets actually recover, and the money flows back through the startups, through the angel investors.
Absolutely. Yeah, we're seeing that in the markets, and it's back to Alex's point. Actually, it's really all about like whether your investors do have the cash or they don't have the cash in order for them to complete a transaction and actually be able to fund you. Again, like it's like back to the same point where cash is king. It's really about figuring out how to maintain cash in your bank account and really prolong yourself and staying alive as much as possible. Perfect. So we actually have a question from some of our participants. So I'm seeing here, some people are asking, what are some sources of alternative sources of capital that you can think of that people can basically get financing? Like any thoughts on that? Maybe JD, you want to continue that one?
Okay, so my expectation is that one successful, well, relatively successful, and I wouldn't call it, it's too early to tell, but so I've seen strategic investors, for example, he's still sitting at the table and still negotiating. I think most VC funds that actually have dry powder, it will certainly slow their process down. But these guys, especially in Quebec, because many of the funds in Quebec have a lot of government money, so they have an incentive to invest. So there may be slower because of the environment, but I think there's a good chance that they would still cut checks. Some VCs in the US are still in business as well. And obviously not all angel investors are out of business. I was speaking with some folks at the Ange Québec, for example, and Ange Québec thus far has had some good participation. Even though none of the deals have closed yet, but there's still some sources of capital. I also expect the government to get engaged, so there should be some government programs put together. There's actually going to be Mr. Fitzgibbon tonight on a direct live cast on Facebook. And so if you folks can register some questions and probe them from some support for the startup community, maybe that would be helpful, actually.
Absolutely.
Hello?
Yeah, I would just add, there is money out there, right? And these funds are tasked to place that money. So there is money. The problem is, the deals are going to be a lot tougher in terms of valuation, and the pound of flesh an investor might take out of you today. But those channels still exist. They're not completely wiped out or stopped doing business. But because of all the volatility in the stock market, that certainly makes an investment into a private company a lot riskier. And so they're going to want to take advantage of that. So there is sources of capital, but you just need to be very careful. They are going to be expensive.
I would add that we shouldn't underestimate the power of our government and what our startups really do well. A lot of our startups are tech startups, and they are very knowledgeable about grant applications and different government funding sources. And these shouldn't be underestimated from the levels of the City of Montreal at PME Montréal, who's mandated to bring money to the ecosystem, and specifically now more than the government wants to stimulate the economy. We're going to see this at the municipal, at the provincial, and the federal level. So yes, clients is going to be a tough thing, even if you keep your clients. And I like what JD said: keep your clients happy, even if they don't pay you, they're still your clients. But they're going to be, maybe not your best payables that you've ever had. The investors, tough market. But right now, the government, for me, is opening up a lot of programs, and I think it's certainly worthwhile to dig into all that.
And just a point on valuation. Many of the greatest companies were actually started in these types of environment, and valuations were affected. And Uber, for example, that everyone knows, raised their first seed round of funding. I think it was 2008, post financial bubble, and the valuation was ridiculous at the time. And they built a fantastic business nonetheless. What I advise founders, if you're raising equity, if you're a startup, there's no way around it. You need cash. And depending on the type of startup that you're building, some can get bootstrapped, some can get built with some debt financing and some grants. And, you know, some other categories of startups will require equity financing. And, you know, equity financing is supply and demand. You know, the valuation is going to be as good as the number of investors who are willing to put a term sheet forward. And at the end of the day, if you need the money, you know, in this type of environment, you just take the terms, you know, you swallow the frog and you move forward. And you know, a lot of entrepreneurs have done it successfully. And, you know, it's basically, it's what it is.
Absolutely. Yeah.
I think the message move forward is the really important part. Like,
absolutely.
Absolutely. Well, thank you, gentlemen. There's another question that it's more on the VC side. Someone asked is what do you think when it comes to the VCs? Are they really going to be like pushing more capital towards their current portfolio of companies, or do you think that they'll be issuing new capital, issuing new checks to new companies given the current circumstances?
I mean, 100%. So the way VCs work is they always maintain a reserve for their current portfolio companies. And obviously current portfolio companies come first. So that's the first part of the question. The second part is that, I mean, obviously in these types of environment, so, I mean, I was a VC in both 2001 and 2008. And what you actually do is go through your portfolio and decide which company you're going to back and which you won't back. And so I mean, and you know, it's some of you guys may know Paul Graham, who was the founder of Y Combinator, and you know, he has a very good analogy that, you know, to him, startups are default dead. So the default of the startup is not to be successful or to be alive, to create a viable business. The default is actually to die, because most startups would die. And you know, I think it's, you know, it's sad to say, but you know, some of the startups will have to pull the plug and, you know, move on to something else. And it's fun as well, right? I mean, it's not a personal, it's an experiment, and some experiments fail, some others succeed. And it doesn't say anything on the people that ran the experiment as entrepreneurs. So my point is, I mean, very clearly, not all startups will get through this crisis. And, you know, if you look at the venture capitalists, they must make capital allocation, and they can't invest in all of their startup. They need to reassess based on the environment.
Yeah, and I think there's a really important message of JD here as a coach perspective. You know, we tend to live in wannabe realities, which is what makes us, you know, successful creative startups and entrepreneurs. We have a vision, we believe in it, we have people, we believe in them. But there's also times where, all the time really, we should have what I like to call the line in the sand. And drawing that line in the sand right now is a really important, probably more important than ever exercise. Like, okay, tell yourself where you're going to be 90 days from now. You'll probably make it 90 days from now. But what is going to be your decision criteria for continuing to move forward with that specific project? Because there's other things you can move forward with, right? So, you know, you should really, it's time now to say, okay, my head's going to be in the middle of the battle for a long time now, but I should, by now, before I even start this crazy race, decide what's going to make me go, no go when.
Okay. Yeah. So your point. So do you guys recommend that, like, let's say I'm an entrepreneur, I'm in the middle of raising, I've already secured half of the amount that I had in mind, and then right now I'm just seeing that everyone's taking their time. I don't think this should I keep pushing forward, or should I stop? Should I be focusing more on retaining my clients versus going out there and trying to get more capital?
The question, I mean, there are a couple of components to this question. You know, the first one is, you know, no investor will put money in the business if you're not able to demonstrate that you will have enough runway to reach an inflection point. Okay. So, you know, so the question of raising half the round, you know, doesn't mean that half the round gets you only 3 months away from now. And, you know, nobody in their right mind would put money in a business today knowing that they'll be running out of cash in 3 months, right? So, so the other part of the question is, do you need to raise money or not? And, you know, what's the probability that you're actually going to be able to do it? So if you don't need to raise money right now, it's the worst time to raise money, so don't do it. Sure. If you need to raise money and it's a question of life or death, you know, then obviously you need to hit the road and get going. And And, there's a point at which you may decide that you have to fold. But, if you can avoid right now because you're generating other types of revenues. I mean, I have an entrepreneur that basically stopped his business altogether, put it on the ice, basically he's frozen it for 3 months. And he basically started a web-based consulting business, doing some tutoring online. And, is right. So he's being imaginative. He knows that he's not going to be able to fundraise in the current environment for his business, and that he's not going to be able to sign up customers. So that's not a pivot, right? I mean, that's a 180-degree turn. And so you have to be imaginative. And, if you look at the Uber, not the Uber guys, the Airbnb guys who basically financed some of their servers, selling cereal boxes at the Obama convention. And, in these times of difficulties, you have to be imaginative and figure out ways to generate revenues.
Yeah, absolutely. No, I think that makes a lot of sense. Alex, we have a question. I think you might help us with this one. So if I was reviewing like my budget like I've set for the year 2020, and I have like my external suppliers, headcount, founder salaries on the product and R&D. What should I be doing as an entrepreneur? Should I be just like cutting all my costs? How do I look at this from an analytical perspective moving forward?
So I think that the first thing you have to ask yourself is, when do you think business will return to normal? And I'm not sure anybody can answer that question today, given the current environment. So without having that information, you've really got to look at how much cash you have, and what is the best way to deploy that cash. So if you are a revenue company today, I say you invest in sales, because bringing in cash will extend your runway. If you're not a revenue company, then you need to cut your expense. So I'll give you an example. Like at Premier Suites now, at the start of every year, we have a budget plan. Well, so now we are reforecasting our budgets based on what we think is going to happen in Q2. We're looking at expenses that we can defer. We're looking at talking to suppliers to see if they can extend terms of credit. We're talking to the bank to see if they will defer loan payments. We're looking at every line item in our P&L and trying to figure out what is the best way to deal with that particular item, given what we know today. So I think, there's no hard and fast answer to say, yes, cut your investment in R&D or cut your investment in your sales forecast. It really depends on the business and where you are and what your balance sheet looks like. But at the end of the day, you've got to try to ensure your survival through this difficult period, right? And so, to the extent that, and I like the analogy, somebody just put the business on ice and said, you know what, I'm going to stop all expenditures because I don't want to go to the capital markets and get creamed. I'd rather just slow everything down, put my employees on temporary layoff. The government is supporting employees that would otherwise have lost their jobs. So there's a lot of government help. I think more so than anything else, there's a lot more government support out there for small businesses. So, without specifically answering the question, I don't think there's no generic answer other than, just look at every element of your business and try to come up with a plan that makes the most sense for your business, given where you're at in your development and what your balance sheet looks like.
Absolutely. And speaking of that, I actually just figured out how to share on the chat. So I've shared with everyone here our sources of non-dilutive financing, especially when as we're updating this on almost a daily basis when it comes to all of the money that's coming from the government. We're really focusing on it. We're putting all the information that you can action on as fast as possible versus all the noise that's out there. So that's just an FYI for all of our participants. So thank you, Alex. Thank you, Alex, for that. Xavier, we haven't heard your voice in a while, so I thought we'll just jump. I have a question for you. Xavier, what do you think? What do you think an entrepreneur, like, I guess we just saw, like, from Alex and JD's side, that they've seen some entrepreneurs where they're just like, shifting their time completely and like focusing on something completely different than what they do. Do you think this is what entrepreneurs should be doing? Let's say I'm not going to be generating any revenues now. I know that my company is literally on ice for the next 6 months. We just like turn to online consulting and just maybe, generate revenues for myself, just just cash flows for myself, which is my company.
I love the example that Alex and JD both bring back up. There's a very smart gentleman that decided to put hold on everything. That's definitely an option. Others are working really hard at getting full advantage of the government grants. That's another option. I think trying to expect friendly financing, everyone's repeated, that's not going to happen. And it's not what's going to save someone that only has 90 days of runway in front of them. It's just not going to happen. So it's all about creativity. I don't think there's a single answer. It's time to be creative. And I think JD said something really important before. He used the word compassionate. You have employees, you have clients, you have stakeholders, you're yourself in an ultimate stress mode. Everyone's at the edge. None of us have ever lived this before. None of us have this magic wisdom that knows everything.
Oh, absolutely, for sure.
One thing that I'll give you an example. So I don't know, most of you probably don't know what Premier Suites does, but it's a corporate housing provider. So if you have an employee and you have a project, you would call us up and we would house that person for extended periods of time. One of the things we're doing now for the clients is we're going to get their groceries, right? That has been so well received by the client base because we're doing something which has tremendous value to them. Everybody's nervous. They're nervous to go out. They're nervous to be in contact with people. So, you talk about compassion. We're doing something that has, it's not a monetary value to people. It kind of goes beyond that. And so if you could think of things like that in your business where you endear yourself to your client, they will not forget that, right? They will not forget that. They will be loyal to you. So I think, you should be looking at angles like that. What can we do as a company that will, benefit society? Because I think ultimately we're all in this together. But I think also, how does that put, space between me and the competition, right? How am I going to be remembered by my clients? And, things like that, not monetary things that kind of set you apart. I think they go a really long way in the current context.
Absolutely. So it's really just like creating that like intimacy between yourself and your client in order for your client to remember you moving forward after this passes.
Absolutely. Yeah.
We have a question related to supply chain stabilization, considering your budget. I'm not too sure who here has more experience on the supply chain kind of side, especially if it comes to more the international supply chain implications. How do you think like the supply chain is going to get affected? And how do you literally look at your budget from that perspective and really whether like, do you look at completely new suppliers, or right now everything's on freeze, nothing's coming in from China, or barely anything's coming in from China? What do we do?
Well, I would say I think there's going to be a lot of rethinking about supply chain and risk, and a lot more local suppliers. I think companies are going to look, even though they may not be the most cost, the lowest cost supplier, I think to take the risk out of the supply chain, they're going to be ready to pay a little bit more to have it sourced locally. I think that's going to be the fundamental difference. And I think there'll be multiple layers of supply chain. So you'll have primary, secondary, tertiary suppliers. So you don't get caught where you're waiting for a $2 part from China and you can't sell your $500 device. So I think that's going to change.
So we're going to be sourcing more, like the supply chain is just going to be sourced more through Canadian and North American companies.
I believe so. I believe so. Who knows? I think a lot of businesses are going to change, not just the supply chain. I think just how we do business. Are we going to travel as much? We're going to use Zoom more. We're going to be doing things differently. I'm not sure how it all plays out, but there's no doubt in my mind, supply chain is one of those dominant elements of a business that are going to be impacted going forward.
Absolutely, absolutely. I think we're we went through a very interesting points of view from everyone. I think we can take one last question. I think we'll look at we can look at one from I guess Azar. Looks like most of these non-dilutives are for QC and Ontario startups. Can Ontario startups apply for them, or do we have to be involved with D3 to be eligible? I think I can take that one. For the non-dilutive, there's really a lot of different points. The link that I just shared, it's really more focused for D3 companies. Again, it's more on Quebec-based versus Canadian-based. But there are a lot of federal programs that you can apply for, and you can also see on our Notion page. But definitely like keep checking out. If you go at the Notion page all the way at the bottom that I just shared, there's a specific Government of Canada search tool that you can use in order for you to be able to more find the right sources of non-dilutive financing for yourself, given the current situation, which is an excellent resource that we've used with each company, that we've used almost with all of our portfolio companies. So I think, we'll take actually one last question before we wrap this up. Someone's asking, how do you make investments to keep the customer satisfaction high? That's a very good question. Anyone wants to answer that one?
Can you repeat it, Mo, please?
Yeah, absolutely. So we have a question related to what should I invest in if I want to keep customer satisfaction high? Like during this, is it more during these times? Is it more like, do I be more compassionate and just like give them a call, make sure everything's all right, or do I like hire more account managers, or keep my account managers versus letting them go to maintain my cash flows?
Well, it's really, I think it really depends. I mean, to me, it starts with communications, right? I mean, it doesn't cost a lot but your time and some of the time of your team. But if your if your customer base is small enough that you can call most of them and all of them, and I'm not talking about an email, but just a conversation. I think one of the outcomes of this crisis is I, for one, and I think it's the same thing for a lot of people, tend to spend a lot more time. I've replaced actually speaking voice by email. So I used to send a lot of emails. Now I do a lot more phone calls than I used to do actually. And people are at home, so give them a call if you can. If you've got 100 customers, split it up between yourselves and take 15 minutes to say hi. How are things doing? Here's how we're doing, and here's what's our plan. And we're going to continue supporting you, and also be flexible with respect to your payment plans. I mean, depending again on your financial situations. I mean, just a personal example. I've got a gym, so I paid for my gym, and the gym owner asked me if I wanted to cancel my subscription, and I said no. I'm going to keep it. You probably need it more than I do. And if all of your customer actually cancel their membership, there's not going to be a gym when we go back. So I mean, obviously, if you're super tight and you can't afford it, at least have the conversation with your customers. So to me, it's just an investment of time. And
yeah. And I've had a couple of startups who were really bright about it. They call the customers, and the customer says, "Oh, I thought we couldn't change. I thought I just have to, cancel." And through dialogue, they built a solution that optimized the situation. So that whole dialogue is really, really important. And I think people like JD, who know that they don't want their supply chain to disappear, that they don't want their services to disappear, we're kind of all in the same bucket these days, right? We don't know, as Alex was pointing out, we don't know what the world's going to look like in 6 months from now. So we might as well, se tenir les coudes, we say in French, because we're going to need each other's help. And I think everyone knows that.
So one example is one company that I work with has put together a special COVID unsubscribe page. So, whenever a customer goes in and tries to unsubscribe, they're taken to that particular page. that basically offers them to downgrade to a new plan that is actually much less expensive and will last as long as this crisis lasts. And as a result, they're significantly reduced their unsubscription rate to their SaaS service. So, I mean, I think, in their case, they have thousands of customers, so it's a bit, it would be a bit harder to call them all up. But they came up with a way that's imaginative to, both, communicate en masse to the customers that they could be losing.
It's amazing.
Yeah. And it's much cheaper to keep a client than it is to customer acquisition. And remember the whole model? Getting your client back is going to be just as expensive as getting him in the first place.
Absolutely. Absolutely.
If you can afford it, do it.
So I think we're seeing, like, from all of our panelists, is that they're all focusing on really connecting with your customer and making sure that your customer is all right and you're there for your customer, and really just like retaining that relationship and just pushing forward, where after this crisis passes by, everything's going to be all right. And in fact, hopefully even better days are going to be coming. So on that, I'd like to ask just like a quick final note from all of our panelists, just their thoughts, current situation, and I guess even like what their daily, because I know you guys are daily conversations with different startups, our companies, just like final thoughts before we end our session. So we can start off with I guess Xavier, since you're on the big screen right now.
I think in a message of hope, there's a lot of us out there in the ecosystem, in organizations like Bonjour Startup Montreal, organizations like Lemaine, who are working really hard with the government and trying to stimulate the happening of new programs, and some are happening. There's going to be announcements that you'll probably see in the next couple of weeks on new programs that are going to be enabled by our provincial minister, the Minister de l'Economie, and Mr. Fitzgibbons. Maybe he'll be talking about it tonight, but there is help happening. I think the government knows it, and the government knows that they got to help us hold the water. So
absolutely,
there's hope.
Yeah, you just got to stay positive.
Some days it's easier than others, that's for sure.
Absolutely.
Again, if you look at history through a longer term lens, we've recovered from world wars and famines and pandemics, and we will survive this. I think the message for everybody is to be safe, look after your loved ones, take care of yourself, stay healthy, and we'll get through this.
Absolutely.
So from my perspective, I think, as a startup, to win, you need to play offense. And unfortunately, we're in a phase where everyone needs to play defense, at least for a while. And I think the faster you can put yourselves in the position to start playing offense, and try to imagine how the world may change, and how you can position your business to benefit from those changes and go on the offensive, and start growing again. I think there's going to be a crop of big winners coming out of this crisis. And I think that once you've stabilized everything, start thinking about the future. And so those would be my last words of advice.
Perfect. Well, thank you so much, gentlemen, for your time. We really, really appreciate it. Again, it's really all about like hope, really connecting with your clients and just like focusing on the long-term picture. Everything's gonna be all right. It's just about staying positive. And then I guess together we're gonna be able to, go through this together, and life's gonna be good. Hopefully we'll go through this. So on that note, I'm looking
forward to going to a pub with everyone and having a beer.
Yeah. There we go.
Other people in the room.
Yeah.
Absolutely. So thank you, everyone. Really appreciate your time. Again, like we're here to help out. We're actually actively recruiting, so please reach out on the link that you can see right here, and feel free to apply to our programs. On that note, I'd like to say all D3 startups, we're sticking around. We're actually going to move to another room, and we're going to start a modeling session, a cash flow modeling session right now to kind of figure out how we can really look at our cash flow model and optimize it given the current situation. So with that being said, JD, Xavier, and Alex, thank you so much for your time. Really appreciate it. And hopefully we'll have you soon. We'll have you again very soon.
Okay.
Thanks, pleasure.
Thank
Bye,
you.
everyone.
Thank you.